And it's 1 p.m. That means it's time to go around the world of business right here on Business Incorporated. Here's what we have for you on the program today. We can't have enough of the Naira speculations and the Central Bank of Nigeria's effort to stem speculations by banks. We'll discuss that on the program. In South Africa, it may be more difficult to get a tourism visa. Find out more. Good afternoon, welcome to the program. I'm Ini John Mekwa. Let's start off right in the global space where oil prices rose on Thursday, supported by signals from the U.S. Federal Reserve on a possible start to rate cuts and on new support measures for China's embattled property market. Brent crude futures climbed 0.6% to $81.09 a barrel, while U.S. West Texas Intermediate crude futures gained 0.82% to $76.47 a barrel after falling by more than $2 a barrel in the previous session. Those moves are likely supported by expectations for rate cuts this year after a speech by Federal Reserve Chair Jerome Powell yesterday, Wednesday. Powell said that interest rates had peaked and would move lower in coming months, with inflation continuing to fall and expectation of sustained job and economic growth. Lower interest rates and economic growth help oil demand. But Powell declined to promise that rate cuts would come as soon as the Fed's March 19th to 20th meeting, as investors had hoped. China, which is the world's second biggest economy, unveiled new support measures to help stem the fallout from the liquidation of developer Evergrande. Opens a new tab, and it ended last year. Now, for the grains, Chicago wheat futures moved lower on Thursday amid weak demand and falling export prices in Russia, while soybeans and corn also lost some ground and were just above multi-year lows on the prospect of ample supply. The most active wheat contract on the Chicago Board of Trade was down 0.3%, $5.93 for a quarter of a bushel. Prices fell 5.2% in January and aren't far from a three-year low of $5.40 reached last September. CBOT soybeans fell also 0.2% to $12.19 for three-quarter of a bushel and were close to Tuesday's two-year low of $11.88, while corn slipped 0.3% to $4.47 a bushel, was near a three-year low of $4.37 that it hit twice during January. Falling wheat prices in Russia, which still has a large surplus to shift before this summer's harvest, have kept the wheat market focus on Black Sea supplies. Russia's agriculture minister has said that the country would increase the area for the 2024 harvest by 300,000 hectares to 84.5 million hectares, bolstering expectations for another bumper crop. Come back to Nigeria now in a bid to fulfill his promise of delivering a multi-modal transportation system for the populace. The Lagos State Governor, Mr. Babatunde Fashola, is in Beijing, the capital of China. While in China, the governor is expected to visit the headquarters of China's Civil Engineering Construction Company for trade and investment discussions with the officials of the company. He will also inspect the headquarters of the Chinese construction giant and some ongoing projects undertaken around Beijing. The governor said that the entourage are billed to return to Lagos next week. And we're still staying in Lagos right now. We also had that the Lagos State has announced that it will invest 550.689 billion naira to develop and maintain its infrastructure this year, 2024. This was disclosed by the State Commissioner for Economic Planning and Budget, Mr. Okpe George, during the 2024 budget breakdown at Alausa in Ikeja. He says that the $550.689 billion on infrastructure represents 24.28% of the entire budget size, which is part of 1.315 trillion naira capital budget for the year.
Our overriding objective to achieve this budget for renewal are aggressively develop, upgrade, and maintain our infrastructures. Infrastructure is essential to statewide economic and social development. Therefore, the huge investment in infrastructure is expected to release the inherent value to the people of Lagos. The state is investing the sum of 550.689 billion, representing 24.28% of the entire budget on infrastructure. Some highlights of infrastructure development include the following. In transportation, a continuation of ongoing transportation projects, such as the expansion of the rail network, road construction and completion of Blue and Red Line and other metro projects. In housing, we're looking at further development of affordable housing schemes and urban renewal projects to address the housing deficits in the state by injecting a total of 55.924 billion, representing 2.5% of the entire budget. Some of the social housing projects include the completion of 444 units of building projects at Shombotedo Phase 2, completion of 420 units of building projects at Ajara, Badagry Phase 2, construction of 136 units of building projects at Ibeshe 2, amongst others. Some special projects, continuous progress on major infrastructure projects like the Lekki-Ekpe International Airport, the Omu Creek, the Blue and Red Line, etc. So it should be noted that these projects will be prioritized in 2024. This administration intends to complete and front-loaded, as I said, the infrastructure projects. So, Fort Mainland Bridge, Okwebi Mende Link Bridge, Stadia, Scripps, Lekki-Ekpe Lagos Badagry Expressway, to name a few.
A lot of promises there by the administration of Lagos State Governor Mr. Babajide Sanwo-Olu, and Lagosians are looking forward to all of that. We leave Lagos and head to Abuja, where Bureau of Change operators in the Nigeria's Federal Capital Territory, Abuja, have agreed not to sell US dollars to customers due to the continued slide in the value of the Naira against the dollar. The union laments that its members are being blamed for the continued fall in the value of the Naira. To this end, the BDC operators agreed not to carry out a no-sales policy today. That's today, Thursday. We don't know about tomorrow, after serious deliberations on how to reduce the fall of the Naira. Similarly, the Abuja chapter of the association, that's of the Bureau of Change operators, have announced the closure of their business premises indefinitely. That's for the BDCs, other than the guys on the street, from today, Thursday, the 1st. The chairman of the association, Mr. Abdullahi Dauran, said that the scarcity of US dollars was responsible for their decision, while adding that online banking transactions and cryptocurrency were behind the scarcity of dollars. Well, I guess at the mention of cryptocurrency, we'll go to our segment there. And Ladi Williams, well, I think he will have to deal with this later. The BDC say that they are responsible for this scarcity. We'll hear what he has to say with his guest later on the program, so do stay with us. Now, there's a popular circular that has been on since yesterday. The Central Bank of Nigeria released that circular, and it's been in the news, it's been everywhere. There have been different interpretations to it. But it's titled Harmonization of Reporting Requirement on Foreign Currency Exposures. If we could have that circular right now, it was on Business Morning earlier today, where the regulator, that CBN, has issued guidelines to stop deposit banks after it alleged that some commercial banks hold long-term position in Forex with the hope of profiting from it, especially when there are Forex fluctuations. And so there you have it, right there. There's a lot of interpretation and understanding of it. And we touched a bit on it this morning with a guest during Business Morning. We'll delve more into it at this time. Joining us virtually from Ikoyi is Mr. Shina Shikpashi. He's an expert with ALEX, financial expert. Thank you so much for your time, Mr. Shikpashi. Good afternoon. I think you're muted. Could you unmute?
Good afternoon.
Yeah, great.
Good afternoon, Ini, and thank you for having me.
Awesome. Thank you so much for coming. So when we look at that circular, I know it's meant for mostly the deposit banks. So you have terms like the net open position. You have terms like 20% of shareholders fund, all of those complicated terms. Help us to understand the message. In simple terms, the message in that circular which the CBN released yesterday.
Okay, let me start by saying that this circular is basically to implement one of the comments made by the CBN governor during when he attended the NESG summit sometime last week. One of the things he said during the summit was that the CBN was going to take certain steps to discourage speculative activities against the Naira. And you will see that since Monday, there had been a raft of directives that have been coming out from the CBN. The first was the one on Monday, basically exhorting the banks to ensure that they use the right, to ensure that they are transparent in the quoting and in the transparent in quoting the correct exchange rates. The second one, which came yesterday, the one you're referring to on net open position, is basically to further that same policy directive for purposes of discouraging speculation against the Naira. So the net open position, simply put, is a metric that is used to measure the exposure of a company, to foreign currency risk. So in this case, the companies are the bank. So the net open position is used to measure it will be used to measure their exposure to foreign exchange risk. And the way it works, it will have to do with the foreign exchange that they have and they trade, and then the foreign exchange that they have and they are holding on. And the reason why people will hold on to foreign exchange is, if you look at the dollar, for instance, is because the bank or the party that is holding on is betting on the fact that that currency, the dollar, will appreciate against another currency, in this case, the Naira. So what the CBN policy has tried to do is to create a framework. Now, this policy or this directive is not a new directive. It has always been the case that the banks should ensure that they are short position. So when we're looking at net open position, it basically calculates the assets, the foreign currency asset, the dollar asset, well, let's call it the foreign currency asset of a bank, and the foreign currency liability of a bank, and the number of things that come into this basket that forms the foreign currency asset. When the sum is done, when the liability is deducted from the asset, you can either have the bank having a lot of liabilities, and that will be as a result of their shorts, or you can have the bank having a long position where the bank is holding on to foreign currencies in order to sell them when conditions are right. That is when the Naira depreciates, or when that foreign currency appreciates. So what this directive is trying to say, what this directive does, is to reinstate the position, the directive that had been issued by the CBN since 2015, actually. There was a directive issued in 2015 that says that for short net open position, the bank should ensure that their exposure for short net open position never exceeds 20% of their shareholders' fund unimpaired by losses. Now, the shareholders' fund unimpaired by losses is what you can describe as the equity of the shareholders of the bank that is not impaired by losses, that is not under any form of lien. Under any form of lien. So the bank is to ensure that its short net open position does not exceed 20% of that of that fund. And then the bank is to ensure that if they're holding on to foreign currency, if they are holding on to if they have a long net open position, that long net open position will not have any impact. And that's the essence. It says it will have 0% impact. It will not have any impact on the shareholders' fund. That is, the bank that is holding on to a long position must find other means of ensuring that that long position is secured, such that if you are holding on to excess dollar, it must not have any impact on your shareholders' fund. So what this will mean is that if a bank is holding on to a long position, which has any impact on the shareholders' fund unimpaired by losses, they will have to sell it, and that sale has to be done today.
By the close of work today. So what do you think now, outside the circular, What do you think about this allegation, by Deposit Bank? I know you do have a lot of conversations and interactions with financial institutions, deposit banks and otherwise. Is it true that banks are a challenge in this chain? Because if you speak to individuals, if you head to the bank and you want to buy dollar, which is what obviously we're talking about in this instance, sometimes it is, the guys out in the street, the unofficial BDCs or black market operators that will come into the bank, or they will be directed into the bank, or you will be directed to them to get the supply that you want. Because one wonders, where do they get it from? Are the banks a challenge here, or is this just an empty allegation?
Well, it is not an empty allegation, and to give some basis to that, you will need to go back to the policy, to the directive released on Monday, on the 29th. In that directive released on the 29th, what the CBN is saying is that the market is being distorted because the banks have not been demonstrating the required transparency. The CBN did allege, or did state in that circular, that the banks have been underreporting. They've been underreporting their transaction. They've been underreporting the rates that are quoted in that transaction. And so basically, if the banks are underreporting, if the banks have been giving misleading information, and CBN is saying that it came to this conclusion based on the investigation it has carried out, that the banks are giving misleading information, they've been underreporting, and they've been doing, they've been having this practice called, the treasurer of the bank have been doing this thing that they call the second check. So basically, they will look at a rate, but before they sell, they go back, their treasury go back, maybe look at other rates, and then say, oh, this is the rate at which we were going to sell. So these are the things that have been going on, and this may explain the reason, because sometimes banks are not able to sell at the rate they like. This may be the reason, this may explain the reason why at the floor of the bank, a customer may be directed to a third party, for purposes of purchasing dollar. So it's not untrue. It's actually what we see happen on a day-to-day basis when you go to the banking hall.
All right, so we do hope that something is achieved. But, there's another group of Nigerians who say, with all of this, it seems we are just chasing shadows, chasing smoke, because the root problem of all of this is supply. We're not producing enough to export to give us the dollar that we need. And so when we put all of this together, we're really not dealing with the problem. We're just going round. What are your thoughts to this?
Well, I agree that the root cause for this is supply, because really these type of things thrive in an atmosphere or in a community or in a society where there is not enough foreign currency liquidity. And the reason why we don't have enough foreign currency liquidity is basically is because we don't do enough to earn foreign currency. Yes, so that's the challenge, but that does not mean that the control measures that are being put in place are not necessary. Because really, in any system, it is the responsibility of the regulator. And banks are expected to partner with the regulators. I was reading through some articles. I was looking at some articles on prudential guidelines. Why are they there? They are there in order to ensure that the banks play a critical role in the economy. Whether we like it or not, they have a critical role to play in the economy. And what, for instance, the Monday guideline indicates is that a number of banks may have been abdicating in playing this role. But that does not take away from the fact that everything must be done to increase the production capacity in Nigeria. So that, fine, we need to increase our crude output, but apart from crude, we need to increase our productive activity. Are there other things we can export of services, export of goods, and those type of things. So if we increase our export, in the long term, it's going to deal with the liquidity crunch. But in the short term, it is necessary that these steps be taken. From what I've heard from the industry, what is being expected is that just among the fugas, the big banks, this measure is likely to lead to release of about $700 to $1 billion into the market. This directive, because now they cannot hold a long net open position that will have any impairment on their shareholders' fund.
Okay, just very briefly now. Very briefly, Mr. Chikwe, we're out of time. Do you think that this relocation, the controversial relocation of some departments, I think 5 departments of the central bank, because I see one of them there is the regulatory and monitoring departments, I think that's how they put it. Do you think this will help them to be more efficient as the central bank in regulating and enforcing some of these guidelines?
Yes, I think it will bring some efficiency because the headquarters of most of the banks are in Lagos anyway. Most of the officers, what they do typically is to travel from Abuja almost on a daily basis. So you can imagine the cost of that, and you can also imagine the time lost during the process of travel. If we were to look at it without politics, look at it from the point of efficiency, it is likely to drive efficiency and increase efficiency within the banking sector.
All right. Thank you so much, Mr. Shina Shipasi, for financial experts with the team at ALEX. Thank you so much for your thoughts this afternoon.
Thank you. Thank you, Ine. Thank you for having me.
Let's take a break. When we come back, we'll head to the markets. To stay with us is Business Incorporated on Channels Television. Welcome back to watching Business Incorporated here on Channels Television. We'll head to the markets now for intraday numbers with Anita Edits.
Yes, good afternoon, Ini, and happy new month.
Happy new month, Anita.
Exactly.
A wonderful month for the markets, the NGX in January.
Yes, in my words, I would say it's a January to remember. Because, yes, we know we just started the year, but so far, as a matter of fact, many of the investors, I'm sure you're one of the investors on the market, and you and some other investors, from the higher rung of the ladder down to the lower end, who are investors, you must have made some money.
Anita, I know, like you would always say, I'm just a reporter.
Okay.
I don't know about being an investor.
Okay, but be a market reporter. Of course,
yes,
we know how to do that very best and then leave the trading to the traders. We're starting off first, so we normally start with on the home front, but this time let's start with Egypt, Egyptian stock market. First, for the equities market across the African continent, they were mostly in a kind of a mixed sentiment. So if you take a look at the board, the Egyptian stock market, it was in the red. But of course, at some point, we saw that's for intraday. The market had been oscillating. And then even talking about Nigeria's stock market, as at the close of Wednesday's trading session, it was in the red, continuing that sell pressure which we saw in Tuesday. And of course, 1.9% was how the index pulled back, in contrast to what it pulled back initially at 1.49%. So far, we've had nearly 2 trillion Naira being wiped off by investors. And year to date, it's about 35.28%, which is still good. The market has been able to hold above that 30%, which it opened the year 2024. And particularly the month of January to remember, that's what you will call it. But previously, it was about 37.99%. But has been able to, in spite of all the sell pressure, which was largely attributed to banks, as well as one of the bellwethers of the market, MTN Nigeria. So we saw that pullback for the market. But as at intraday, the market was up by some margin and then regained, although it had fallen from the 103,000 points to about 101,000, but still starting off February intraday in the green. Now, let's talk about the Middle Eastern stock. For the Middle East, we see the Abu Dhabi trying to make some rebound from the sell pressure that we saw in the previous days. Abu Dhabi index, which is on the United Arab Emirates Stock Exchange, it was in the red, but at intraday, it was up by 0.08%, while its counterpart there, the Dubai FM, was down, as you can see there, 0.71%. Let's move over to, I guess we'll be talking about the market. We're talking about Nigeria's stock market first. We're looking at the month of January, reviewing it first before we delve into other issues. And we have James Adisa, a financial market analyst at Chapel Hill Denham, to give us more details about that. Thank you for joining us, James.
Thank you very much for having me. Good afternoon.
Yeah. Okay. So now you tell us. You're an analyst. What do you make of the month of January, where we saw we've seen some Q4 as well as full year 2023 results coming into the market? Did they really have any impact apart from the overall percentage gains that we've had? I've not even talked about the value terms, but give us details about the January market review.
Okay, so just to start with, I agree with you completely that January is definitely a month to remember. We saw that the first week of the year started off really strong, delivering 6.5% week on week. And if you look at that relative to the first week gains that we've seen over the past 18 years, that's really the strongest gain we've seen over that period. I was driven by the telco names as well as the banking stock. Positive sentiment from 2023 filtered into 2024, and we saw investors remain positive and constructive on the banking names, right? Moving towards the end of the month, we saw a major investor in the market coming to buy Dangote Cement. He intends to acquire part of his stake in the company, and we saw him aggressively buying up the market, and that also propelled the NGX ASI to deliver 35.28% that we've seen today. So far, yes, we've seen some companies release their unaudited financial results. But the reality remains that, this market is really interested in dividends, right? And we think that, upon the announcement of dividends, we will begin to see the markets really respond to the results that we've seen so far. The banking results, as expected, have been positive. The consumer goods names have, suffered the storm of FX, right? And, this has really sort of dampened the sentiment in the consumer names and also boosted the sentiment for the banking names. So that has really been how it has played, in the market so far.
Okay, so now I heard you talk about the banking sector, which already had been taking a hit to profit-taking. But in particular, overnight we heard the announcement of Mr. Billionaire investor, Mr. Femi Otedola, being announced as the chairman of FBN Holdings, where after so much of the drama that we saw sometime last year. Now, tell us, are investors excited about this, and how's the share price of FBNH? How is it trading at the moment? Yesterday we saw it down by 9.96%. So now, how's it trading at intraday?
So, first of all, to discuss the interest or the appointment of the billionaire Femi Otedola as the chairman of FBNH Holding. We all know that he has a reputation in the market, and the reality is, in our view, we think it will bode well for the stock, right? So generally, it's hard to isolate this event from the general positive sentiment in the equities market across the banking names. We've seen GT Codes and all those names are up today, as well as FBNH. There's been some buying interest in the name, but it seems like it's a general positive sentiment around the banking name, as opposed to an isolated event-driven rally in FBNH in particular.
Okay, James, I think we'll leave it there. And of course, our eyes would definitely be on the market, and in particular, FBN Holdings, to see how that market continues, its path on the Nigerian Stock Exchange. So, thank you so much.
Thank you very much for having me. Have a great day.
Same with you. So that was James Adisa, financial market analyst at Chapel Hill Denham, giving us details about the equities market on Nigerian Stock Exchange. Now let's go over to the United States. We saw for the futures, the stock futures, they were mostly in the positive terrain, and this is coming after they suffered a lot of they were really hammered. They were really hammered yesterday. We saw for Thursday, we saw the market ending, particularly the Dow Jones, it fell by about 0.8%, posting its worst day since December. For the S&P, it slid by 1.6%, its worst day since September, while NASDAQ was down, was mostly hit down by 2.3%. And this comes a day after the market the market had reacted to the announcement by the Federal Reserve that it was holding its interest rate, the range in between 5.25% and 5%. So that was for Wednesday, but for Thursday, the major averages, they were in the green. The stocks tied to the S&P, they were up by 0.4%, while those listed for the NASDAQ, they were up by 0.6%, while for the Dow Jones, it was up by 0.1%. Now let's move over to Asia. In terms for Asia, the market was slightly mixed. We saw across the regional indexes. They also reacted to the overnight announcement of the U.S. rates decision. And then, of course, for Japan, the Nikkei 225, that's the 225 most capitalized stocks on the Japanese market. It was down by 0.76%. It ended at 36,011.46. In South Korea, it was also in the green. For Hang Seng, the Hang Seng index was up by 0.33%, and then other markets were positive for Asia.
All right, Anita, thank you so much.
Pleasure.
Well, let's head to London now. Juliana is standing by. Juliana, good afternoon. IMF's suggestion to the UK has got a lot of conversations on. I think one is from Mr. Jeremy Hunt, talking about finding a balance between tax cuts and public spending. What has he been saying? Okay, I think we're having a little bit of challenge with Juliana right there. Hope to get her before we're done with the show. Well, I think another conversation in London right there is the fact that Shell is saying that they're going to raise dividends again. And that's in spite of a fall in their annual profit. They lost about 30% on their annual profit, and yet they're promising dividends. I wonder maybe there's a windfall somewhere around the corner, but I hope we'll get Juliana to discuss that with us. So let's move over to Berlin and find out what's happening there. And I know one major story there is that German automobile giant Volkswagen is in talks with tech firms about creating new digital prototypes for products and features using artificial intelligence. Yeah, AI is in the air everywhere now. We have, I think this is the first time we're having Ekrem now joining us. Hi, Ekrem, good afternoon. So tell us, what is this about?
Thanks for having me, Ini. Volkswagen has founded a new artificial intelligence lab to generate new product ideas, including possible cooperations with companies in the technology sector across China, North America, and Europe. The company aims to generate early-stage prototypes in areas like AI-optimized charging cycles, predictive maintenance services, and voice recognition. Volkswagen said exploratory talks with tech companies around the world on initial projects are already underway. We are yet to see further details, though, in the coming days or weeks. What we know so far is that Volkswagen's new AI lab will not be housed inside the company's software unit, CARIAD, or any other specific brand. Volkswagen representatives expect the AI lab to move faster than other processes within the company would. The company said that the supervisory board of the lab will include representatives from car maker giants Volkswagen, Audi, and Porsche. Last but not least, as we know, earlier this month, the company announced it will incorporate ChatGPT into infotainment systems of its cars. It seems that we are in for a ride with AI-supported cars in the near future.
Yeah, but I know it's not just Volkswagen that is thinking about AI. What about competition? What are they doing and how are they reacting?
Yes, indeed. Also this week, Peugeot announced its plans to use ChatGPT to improve the voice assistant in its cars and vans. The French company will launch a pilot version of the ChatGPT service, which will be able to connect to vehicle controls and answer many general or navigation-related questions in 5 countries in Europe. Those countries are France, Britain, Germany, Italy, and Spain. Peugeot is planning to turn the service into standard equipment sometime this year. Last week, Peugeot's parent company Stellantis announced that it acquired the artificial intelligence framework and other assets of tech company CloudMate to support the development of its smart cockpit platform. Finally, already last year, Mercedes-Benz started a trial in the United States, allowing the drivers to use ChatGPT to get more natural responses to inquiries ranging from destination details to dinner suggestions.
And I wonder how investors are taking this into the markets.
Well, we now have relative clarity over what Federal Reserve is going to do moving forward. On Wednesday, Fed Chair Jerome Powell announced that interest rates had peaked and would start going down in the coming months, with inflation continuing to fall and an expectation of stable job market and sustained economic growth. But Powell was also clear on the fact that a rate cut in March is highly unlikely, despite earlier market expectations. Now, markets have lengthened the odds on a first rate cut in March, only to double down on an easing in May. All in all, markets will certainly draw confidence after Fed's signals on imminent rate cuts, a weakening inflation, and a recovering U.S. economy.
All right, thank you so much, Ekram, for that. I'll talk to you tomorrow. I believe we should have Juliana now. Hi, Juliana, can you hear me? Oh, great, I see you.
I can hear you. I've been listening to you.
Okay, and I see you got the memo for the wardrobe today.
I can't see you, unfortunately, but I'm always trying to keep up with you, Inni.
I know. All right, so we know that Mr. Hunt has been talking about the IMF solution, talking about tax cuts and then public spending. What has he been saying?
He's been saying quite a lot. I don't know how long I've got with you, Inni. I know when the two of us are together, sometimes the plug can be pulled. So let me just quickly talk, if I can, about the first Monetary Policy Committee meeting of the year, which has taken place today. And we got interest rate announcements from the Bank of England. And for the 4th time in a row, the Bank of England have...
Alas, her fears come to pass. I wonder what's happening with the technicals, Juliana. I don't know. Okay. Okay, do we have Juliana? Okay. Wow, I don't know what's happening, Juliana, but we need to get this conversation up. You know, it's important. But anyways, while we'll see if we can still get Juliana back on the show now, let's get to Africa and find out what's happening. We start with South Africa, where the latest directive from the Department of Home Affairs, that's the DHA, instructing visitors without visa renewals by the February the 23rd to promptly leave South Africa, has been criticized as thoughtless directive by the Southern Africa Tourism Services Association, that's SATSA. The DHA introduced the directive during the festive season, December the 21st, 2023, overturning the previous agreements that granted visitors additional 90-day extension while awaiting visa renewals. The directive implies that individuals who arrived in October, November, and sought to extend their stay must now depart from the country by the end of this month, February. And that, of course, has caught many people off guard. In Egypt, the central bank has issued a statement refuting several rumors spread online regarding the issuance of new instructions from the CBE to revise the daily maximum withdrawal limit from customer accounts. The central bank assured that it did not issue any new instruction regarding cash withdrawals. The rules previously issued in 2022, which raised the daily maximum withdrawal limit for companies as well as individuals from about 50,000 of its currency to 150,000, are still in effect, according to the Central Bank of Egypt. And still staying in Egypt, an International Monetary Fund mission to Egypt has extended its visit until the end of the week for urgent talks on potential deal that may bring in partners and exceed $10 billion. The North African nation is discussing increasing a $3 billion IMF program, little of which has been disbursed as part of a wider package that might also include the World Bank. According to people who are familiar with the matter, Egypt is already the IMF's second biggest borrower after serial defaulter Argentina. It's not clear if the IMF is asking for an immediate flotation of the Egyptian pound to sign off on a deal with the oil-rich Gulf nation that joined Egypt's previous rescues that are expected to be part of any new pact. The deal that's taking shape will broadly cover what Moody's Investors Service estimate is Egypt's external funding gap in 2024 and 2025. Hard currency remains scarce, and the government is all about shutout of international bond markets. In Ghana, the Emissions Levy Act of 2023, imposing a levy on carbon dioxide equivalent emissions from internal combustion engine vehicles, has been enforced by the Ghana Revenue Authority beginning from today, February the 1st, 2024. The emissions levy bill approved by Parliament imposes an annual charge of 100 Ghana cedis on all owners of petrol and diesel cars. The government's objective with this tax is to encourage the use of environmentally friendly energy sources for vehicle power, aligning with its commitment to climate-positive actions and carbon offset initiatives. All persons who are required to pay for the emissions levy are to register and pay the levy on the Ghana government platform only under the Section 4 of Act 112. A person required to issue a road use certificate, that's a driver and vehicle licensing authority, and then other testing centers shall demand evidence of payment of the levy before issuing a road use certificate. Well, I guess some countries will be learning from Ghana, watching to see perhaps we'll have more emissions levy. That could force a lot of individuals, to embrace the green energy that has been preached on. Let's head to the crypto space now. Remember that conversation with the BDCs, Larry? Right. You are now a corporate, you and your crypto people.
You're the
cause of dollar shortage in Nigeria.
Yeah.
So says the BDCs in Abuja, It's not me.
Trying to understand how that works.
I don't know.
But I guess it's because of the amount of liquidity we see in that P2P market is quite incredible.
Yes, it is. But I mean, does it affect the supply in Nigeria?
Because I'm wondering how it affects
the
BDC, because at the end of the day, the BDC needs supply. Because they did say they don't have supply.
And they need physical supply.
Exactly. But, we see how the crypto market works. It's quick.
You have been served.
So fast. Yeah.
You have been served.
Exactly.
That's all I know.
Yeah. P2P market being blamed at this point. All right, let's look at the headlines there, where we see the Association of Bureau de Change Operators in Abuja. The chapter there, they've closed indefinitely from today, the 1st of February. They claim that, right there, you did hear, that the P2P crypto market is actually impacting, their business at this point, and they're not able to get liquidity at this point. So that's why they're closing down that chapter. Let's look at other stories now. We see the U.S. Fed yesterday, as expected, consensus. They've held rates for the first FOMC meeting of 2024. But what investors were trying to pick is what's going to happen, going forward when it comes to rate cuts. Everyone's talking about rate cuts in 2024, expecting, the U.S. Fed and other apex bankers are going to dial back on the rate hikes at this point. But it's a hold, and he did say no rate cuts in March 2024, and definitely investors reacting to that. Every investor expecting, a rate cut in March, but he did say there'll be rate cuts at some point, but everything has to be data-driven, for them. If the data doesn't, correlate, then they'll have to keep hiking rates. Let's look at our stories now. El Salvador, they're planning their Bitcoin city. Yeah, the president, Nayib Bukele, announced in November 2021 that his Bitcoin city would boast of everything from residential and commercial areas to monuments to this currency, that's Bitcoin. So definitely be watching out for how that city is going to look. But definitely we know the president is pro crypto this time. Let's bring in Shehu Dania now, joins us via Zoom from the UK. Great to have you, Shehu.
Hi, good afternoon. It's a pleasure to be here.
Fantastic. So we're seeing the BDC operators in Abuja, that's the Abuja chapter, closing shop from today. They did blame illiquidity issues, at this point. They're not able to get dollars. And they're also saying the P2P crypto market is impacting their business. Help us break it down.
So, those accusations are unfounded because the thing is, digital currencies only form a very small portion of the overall FX activity in Nigeria. There are larger factors that lead to forex scarcity, oil price volatility. Nigeria is an import-dependent country. So evidently, basic economics of demand and supply will let you know that. And of course, the BDCs do physical cash. They primarily deal in physical cash, and most of the crypto transactions, all crypto transactions are digitally, they happen online. And so there's no competition between, BDCs and the crypto space. However, blaming the crypto for the woes of the BDCs is distracting. We're not facing the underlying issues that creates all these tensions. What it is that the world is going digital, and it's important for us to be able to, use technology and innovate. There's definitely a point for synergy, between BDCs, traditional operators, and digital currency operators. And the truth is the crypto space is embracing, and kind of like helping with financial inclusion, because a lot of people can, from anywhere they are, very convenient. People are able to carry out their transactions as opposed to having to go somewhere. And like right now, Nigeria is a free market. The FX is a free market. Willing buyer, willing seller. So what the crypto market does for people is it allows people to see what they want. Compare that with the traditional BDC, where you have to go out to the person and then you start asking rates from maybe like 10 different people. Then they they start negotiating back and forth. It's a lot of time wasted. But then there's room for synergy, in how, government needs to be able to come properly regulate both sectors and see how, the BDCs can also use technology to, enhance how their transactions work. If, like we had before, it was simple and it's very simple for the BDC operators, who are licensed to transact money, the forex that they have in their bank accounts without having to incur heavy rates, heavy charges. So for instance, now if you're going to make a transaction between your DOM account, between maybe Shehu is sending money to Ladi, who is my brother, I'll probably be incurring charges of about 0.5% on us exchanging dollars. And the crypto market is giving maybe very, very significantly less charges on transactions. So those things, everyone has to come back and sit down at the drawing table and look at how we can make all these things work together.
So that means you're saying if the BDC operators take some of their operations online, where you can just quickly trade most of these currencies, and that could help their business.
Oh, evidently. So first thing, the government needs to understand that the world has changed. Everything is digital. Most things are digital. Most people who trade in FX or who deal with FX, who do business with FX, who want FX, have domiciliary bank accounts. However, it has become extremely difficult for you to do any transactions within the banking sector. That would be the reason why a lot of them would, move to the crypto, to buying crypto. So if the banks, if the BDCs also speak with the government, and then they also, kind of like find a way with the banks to ensure that, those you can, from your bank app, transfer, FX to your customers. You can buy and sell, do all those things that you want to do. That's where the world is headed. So we need to be able to collaborate and emphasize that it's a joint effort. If they had their ways, there are people who won't touch crypto. I know people who have never used crypto, who still will never use crypto, and but they trust their banks, they trust the BDCs, they trust the people that they do business with. However, they just need some room for convenience.
Right.
You know, they want to execute a transaction now. They want it as soon as possible. And I think that's those kind of things that the crypto satisfies for people.
Right, and Cheryl, right now we see that the CBN is, releasing circulars at this point. They're trying to, halt that, free fall, of the Naira, if you could call it that. But at the end of the day, different activities are making the Naira, weak, at this time. Talk to me about the role, crypto can play instead of weakening or adding to weakness. Kind of strengthen the Naira also.
So evidently, I've always been an advocate that cryptocurrencies have significantly provided, a lot of succor to the Naira downfall because there's so much demand for FX in Nigeria, and the FX cannot be gotten from the banks or from the BDCs, as you can obviously see. And a lot of our importers or a lot of other people have then move to cryptocurrencies, which kind of like is more available. So imagine if we do not have cryptocurrencies available in Nigeria and all this demand is going through the traditional banking system. I'm sure the value of the Naira would have been worse. So cryptocurrencies can only hedging for the Naira. Cryptocurrencies can help, however, it still needs to be it needs to be properly regulated. It needs to be the government needs to, right now the government knows that they cannot, take their eye off it. It needs to be properly documented, regulated, understand the players, set guidelines for how the players within that space operate, in order for there not to be chaos. But yeah, cryptocurrency is helping the country in a significant way. However, the government regulations will help the industry to ensure that the players, the people who are trading in that space, have national interest at heart. And,
all right, but very quickly before I let you go, definitely we've heard from the U.S. Fed chair that March there's no rate cuts in March, but there could be rate cuts at some point in 2024. How are crypto investors taking this?
Right now, most people are looking forward to the Bitcoin halving. The rate cuts, everybody would, kind of like see the direction for that. It's still a probability. It's not yet cast in stone. So whatever it is, everybody just puts their ears on the ground. If the rates are not cut, people know that yes, it's time to go in harder. Prepare for the halving. People trade more on the ETFs, and
right.
I think it's positive for everybody.
All right. Well, we'll keep watching. Thank you so much, Shehu Dania, CEO, Alpha Gig Technologies. Thank you.
Thank you very much for having me.
All right, so Ini, first it was the ETF. The ETF spot approval, that's approved now, that's come and gone. But now it's the halving, everyone's looking forward to the
We've been talking about this
market.
halving for months. I can't wait for it to come.
Yeah, the halving.
So we'll see where it leads Bitcoin to.
And they always believe it's going to raise the price of Bitcoin at some point. But we'll see.
We'll see.
Never can tell.
Time will tell. Thank you so much, Ladi. So that's it on the program today. Thank you so much for being a part of it. It's just one more for the week, so make it a date with us tomorrow, 1 p.m. Of course, 10 a.m. Ladi Williams will be back for Business Morning on Sunrise Daily. You don't want to miss that well-packed 30 minutes, 10 a.m. tomorrow. Oh, sorry. Ladi will not be here tomorrow. It will be me, so you have to deal with me all through tomorrow. I'll see you 10 a.m. and then I'll see you 1 p.m. I'm Ini John Mekwa.